So we've talked about what the blockchain is, how it's essentially just a decentralized ledger that has a list of transactions on it, where there's miners that do some work to authenticate the transactions and certify that it is correct. Now, that being said, in the example we've shown, I had myself as having, $100 and sending a few dollars to a friend, and a friend then sending a few dollars back to me. Well, those dollars, we could change it to something else, like a Bitcoin. I could have said I have 100 Bitcoins and I send some Bitcoins to somebody else. Or I could have called it Ethereum or Litecoin or something else. And that's essentially it. We can replace, and the blockchain itself can support any currency that we can invent. Now, that being said, why are there so many currencies? Why isn't there just one? Why do we need so many currencies and not just have one that serves the purpose of cryptocurrencies? Well, that's the thing, is what is the purpose of cryptocurrencies, right? There's many purposes for cryptocurrencies, and that's what we're going to look at now. So we are going to look at a few cryptocurrencies, but before even getting into that, why are there many cryptocurrencies? One, because they have different protocols. So some cryptocurrencies want to have a ledger that's very small, so you can just put in a few transactions in it. Some of them want a very big ledger that you can put a lot of transactions in it, right? Some of them want the miners, people who are proving that the transactions are correct, to put in a lot of work and be extremely certain that the transactions are correct, right? Now, some other currencies might not want miners to do so much work and to be so sure, because they want the transactions to be faster. So they don't want to favor security as much, but they want to favor speed or something else, right? And it's not to say that to have security you can't have speed. You could have both, but there are a bunch of different protocols or things that you could tweak. Like Bitcoin, for example, has a maximum supply of 21 million Bitcoins, cannot produce any more Bitcoins. Well, that's something that we can change. We can have another currency that has 1 billion coins, right? There are currencies that have technology differences. Not all of them are based on the same type of blockchain in a way. Some of them have some differences, which we'll see in the next lectures, and they all have, not all of them, but mostly they have different purposes, right? Some of them have the same purpose, but a lot of them have different purposes. And what I mean by that is basically, some of them are meant to be a payment system, pay people. Some of them are store of value. Some of them are a platform that's meant to decentralize something, right? And, like I've said, a coin can come and say, you know what, I want to replace Uber. So instead of you using Uber as an application, well, they create their own decentralized Uber app, or they can call it taxi coin, right? And it could have its own blockchain, its own miners. And when you want to use that application to get a driver to pick you up, like a taxi, you use it. And then you use it by finding which drivers are next to you. It's all recorded on the blockchain. And then you can pay them with that coin. They can only accept that coin, so it has a purpose. And you cut out the middleman, so you cut out Uber, so the taxi driver gets a higher amount of money. You as a user, you pay less, and it's safer. Like we've seen, things cannot be altered. If you give your driver a 1-star rating, nobody can change it, and it just makes a lot of sense. So there's all these different currencies. You can go check them out on coinmarketcap.com. So coinmarketcap.com. I guess I just wrote it here. So let's open a web page. You got to get familiar with this website. This is the website that we use most to look for coins, or to get like an overview of the coins. So it's called coinmarketcap.com. Market cap for market capitalization. So it's a very simple website. It basically lists all the cryptocurrencies in order of market capitalization. Market capitalization is basically how the value of all the coins at this current time. Example, Bitcoin right now is trading at $6,700, and there is this amount of supply. Again, the maximum supply for Bitcoin is 21 million, but right now there's 17.2 million Bitcoins. Now, every time a block gets mined, miners, produce a block, they confirm a block. There is, like we've said, a block reward that's given out of 12.5 Bitcoins. And that happens for Bitcoin every 10 minutes, because every 10 minutes, we're going to have a new block that's generated, and that's how their protocol is done. At one point, there will be no more Bitcoins to give because we would have reached the maximum supply. And at that point, miners will only get paid from transaction fees. Now, this is one currency, but you can see here there's a lot more currencies, right? And again, if we get back to here, to Bitcoin, I can see that if I multiply, 17,233 Bitcoins times the price of Bitcoin right now, which is 6,724.49, well, that gives me $115 billion. And here it is. That's the market capitalization, how big it is. Now you can see that Bitcoin is 115 billion. The next one is Ethereum, which is way smaller, 27 billion. And the one after that is XRP, 12. And you can see that they get really smaller. So if I go from Bitcoin to the 10th largest cryptocurrency, which is, as of now is IOTA, Bitcoin is 100 times bigger, right? And that's the 10th biggest coin. Now, if I go down the list, look at these coins, way smaller, right? If I go to the 100th coin, it's only 62 million. So that's very small compared to Bitcoin. And if I go, down the list and I go to, let's say, the 500 coin, okay, in the list, because there's thousands of them, well, this one is only worth about 5 million. 5 million is nothing, right? And it's up 23% today. But 5 million is nothing. That's such a small, such a small financial product, right? 5 million, that means somebody can just come and buy all of it like this, because 5 million is not that much. So you have to be careful of what you're going to be investing in, right? And, out of all these currencies, there's a study that came out, a very robust study, I would say, that showed that about 70% of all these currencies are scams. 70%, which is huge. And that makes sense, right? There's no regulation. Anybody can start their own currency. I can start a currency tonight. It would actually be quicker starting my own currency than doing this course, because the codes to run a currency are open source. You can just copy paste them, change a few things, and that's it. You can have your own coin. You don't even need to create your own blockchain and have miners on your coin. You can actually use another coin's blockchain, and some of these currencies like Ethereum permit you to do that, which we'll get into in the next lectures. But all in all, to say that you have to watch out of what you're going to be investing in. A lot of them are scams, but a lot of them are really good, and they have solid ideas about what they want to do, and they have solid projects and solid teams, and they have a game plan, a roadmap of what they're doing and when they're doing it, and they're following it, and you can follow it and see, they are doing what they say that they're going to do. So all in all, lots of currencies, lots of different applications. We'll get into some of the top ones, but a lot of other bad ones. You have to do your research, and you have to be certain of what you're investing in. So that being said, let's just jump into it, and we'll start by looking at Bitcoin in the next lecture.